President Trump wants to open the door to everyday investors jumping into private equity through their 401ks. Let's get some common sense from Craig on that hot topic. Craig is the co-founder of VestGen as well as a wealth advisor. Break down what is private equity, because there are some concerns. In fact, Warren Buffett is not a fan because of the lack of transparency sometimes.
Well, Angela, it is big news, and that's what you're always breaking on this show. And the big news here is this: private equity might soon be coming into your 401k plan. Is that good or bad? We'll see how it evolves. But private equity, just so we're all on the same page, is nothing more than having the opportunity to invest in companies that happen to be private versus investing in companies that happen to be public. And the truth is, the number of private companies is literally 25 times larger than the number of publicly traded companies. So a big part of this push is about expanding the opportunity set for all investors.
Which is wonderful, because mostly only the wealthy have had access to investing in private equity. But what questions are still lingering in the industry, and will it be risky?
The executive order that's coming from President Trump shouldn't be a surprise to anybody, because he tried to get this through in the first term. But when you think about investing in private companies, are you investing in what I call the common stock of those private companies? Are you going to be a lender to those companies? Are you going to be a leaseholder in the form of real estate to those companies? And how are we going to bridge the gap between what investors are used to, daily liquidity in 401k plans, and something that might be semi-liquid?
Why do you think the president is doing this now?
There is tremendous pressure coming from various forms of plan sponsors who see an untapped $12.5 trillion market. That's right, Angela. There's more than $12.5 trillion in 401k plans. That is a very tempting and zesty source for private equity managers to want to get a foothold into that market for both the revenues and opportunities that it can help fund.
What are some benefits?
I think the number of public companies continues to shrink. Angela, you and I have talked on your show before that IPOs are down 22% in the last 5 years, while the world of private credit, which is feeding all these private companies, has grown by 60% in the same time period, the last 5 years. So I think there's a real argument to be made that if investors want to have the benefit of potentially participating in companies earlier in their development, given the only companies that tend to IPO today are already companies that are more mature, hence their growth prospects are more limited, I think this is a great idea. And if you want to learn more, you absolutely can. I encourage you to connect with us. Go online to getretiredstayretired.com. That's getretiredstayretired.com.